What's going on, everybody? It's your boy C-Zar, and we are talking about how to prepare for the crypto bear market, right? We're going to look at the charts. We're going to look at Bitcoin mainly, primarily for this video. And I don't believe that the bear market is going to happen anytime soon. By the end of this year, yes, I think if soon is within a year's time, then sure, soon. But I truthfully believe that the cycle's not going to end until October or later this year for the majority of cryptos. So we've got some time left. But I do think, being that we are fast approaching this time when the cycle likely ends and we roll into the bear cycle, it's important to discuss a kind of game plan, a perspective of preparation, right? And if that sounds good to you, hit the like button, subscribe if you want to see more content like this. This video isn't going to be an absolute manual for everything that is bear market, but it's going to be at least some thoughts that I've had today, specifically whenever it comes to hedging against losses and how to preserve your capital in a bear market. None of this is financial advice, okay? I am not your financial advisor. This is not financial advice, but this is just my opinions, my perspectives, and probably what I'm going to be doing, or at least some of what I will be doing in the coming bear market, okay? I don't like making videos like this so far out because I think it's falling on deaf ears. We've got more bull cycle to go, right? We've got all this to go, in my opinion. Why am I talking about it here when we could just talk about it over here or later in the year? And I will make videos like this more regularly as the cycle progresses, but I think it's worth it to at least bring it up and get prepared for it now, right? So that we understand maybe how best to preserve wealth whenever it comes to the crypto bear markets, and still keeping your money in crypto primarily. So let's get into this here. I think identifying and addressing our behavior in the bear markets is a good way to start this video, so let's do that. If we look at the beginning here from 2011 in June to the end, this bear market lasted about 5 months. Now you can see not only did it last 5 months, but there was an extended amount of time before we really got going. Sure, the bull market started here in November of 2011, but we really didn't start moving. We didn't see the bull market kick off into this phenomenal kind of phase of a rally until January 2013, which this month, by the way, is after the November 2012 halving. And you'll see that in every single bull cycle. You'll see, I'm going to bring up my big face real quick. You'll see that the biggest parts, the cycle really starts to kick off after the halving. Specifically whenever we break above the pre-halving high, right? Every single cycle you run up beforehand. Here's your run up. This is the high right before the halving. Whenever you break out of that high, the pre-halving high, that's when things really kick off, okay? I just want to say that going forward. So 5 bars, 5 months of a bear market, 19 months before you really kicked off again and you were in full bull tard mode, right? Here we are on the next bull cycle, and that was our first bear cycle, so it's probably going to be a bit different than any of these other ones. I don't think the bear cycle here ended at 21 months. I believe it ended here at 14 months. We still moved sideways. The bull market hadn't begun yet, but I would say from the end of the last bull market, we didn't really kick things off. I mean, probably until this month here, and even then it was kind of lagged until probably this month, until May of 2017, right? But again, that was after the halving. Our halving before this, May of 2017, was July 2016. This high here, this was our pre-halving high. Once we broke above that, that's when the phenomenal end of cycle rally came in. This was 14 months of a bear cycle, 42 months before we started getting going again, right? And I think this is important to identify. Some people might be wondering, okay, I understand why we're measuring the length of the bear market, but why this metric? Why do we care about how long it takes before things really get going? Because the reason why we should care is because if we're thinking about the bear market, right, we're thinking about how to preserve our wealth in the bear market. We're doing this for a purpose, right? We're doing this to not just preserve our wealth through the bear market, but prepare ourselves for the next cycle up, right? That's what we're doing. And I think with that, right, there are times where it's safe to accumulate, and there's times where it's not safe to accumulate in the cycle, right? From here, ideally, and let me get the brush right. Ideally, you buy here. But throughout this whole cycle, I would say as long as you're buying before this point here, you're probably in a rather safe kind of risk-free state of being, right? You're below your all-time highs. You're not in this end of cycle finale phase that things get the blow off tops on, right? I think that even though it's not the most ideal time, right? This was the most ideal time at the base down here. Even though something like this wouldn't be the most ideal, it's still an opportunity. It's still a rather low risk kind of metric to get into the cycle. So that's why I think it's important to measure this too, right? Before we really get going, how much time do we have to endure the bear cycle, right? That's this first measurement. How much time for us to endure it, and then how much time to get prepared for the phenomenal blow off phase that we have at the end of the cycle, right? That's kind of the two metrics here. So just understanding that in case anybody's wondering. This next bear cycle started, or it lasted for about a year. So you notice here, this one was 5 months, this one was 14 months, this one was 12 months. To me, 5 months is the outlier. 14 and 12 months, that seems, and actually if we can measure this next one, this one lasted about 12 months as well. There seems to be about a standard, around a year of a bear market. Maybe a little bit longer, maybe a little bit shorter, but around a year of the bear market is what we see, okay? 42 months before we really got going last cycle, or 2 cycles ago. I would say it was here. This one was 34 months. Instead of 42 months, it was 34 months that it took us before we really started to get going, okay? And I'm not measuring how long the bull cycles are. I'm just measuring these aspects of how long do we have to endure, and then how long do we have to get in before the big finale comes, okay? This cycle, it's debatable, and it might not feel like it, but I think our finale phase might have started here. And at 36 months, that's actually very close to 34. It's very close to 42. It's possible we haven't started it yet, and we could say that this month or next month would start it, and in which case we're at 39 or 40 months, which also is within this range. But I'm going to step on a wild limb here and say that was the beginning of this kind of finale phase. Though it might not feel like it now, let's wait to see the end of this month. It might be more obvious, right? One red month, and this might have kicked it off. If we're at 130 grand or higher by the end of this month, I think it'll seem more like this was the kickoff here, okay? So in other words, a kind of good way to look at this, right, might be that whenever it comes to throwing money into crypto, at least for long-term holds, when it comes to anything that's long-term, it's probably not a good time. It's probably better to save your money. Now, if you're the type of person investing and you think that it's okay to do short-term trades, you're in it for, a 100% gain, a 200% gain, something like that. You're in it for a month, 2 months, 6 months, something like that. You don't have a long-term plan with it. It's meant to be in and out kind of money. I think it's fine to get in still, depending on the crypto, depending on your choice. None of this financial advice, I'm not your financial advisor, but for long-term holds, it's not really an ideal moment to get into the bull cycle. I say that, but I actually do believe, and I'm not going to lie, I would like to say, while generally that's true, that the risk starts to add on from this point forward. I do believe that when it comes to the next bear cycle, I do believe that we will bottom higher than even the current prices. Now, I think we will bottom above 100K for the next bear cycle, and we'll identify that too, right? We're going to go through all these bear market metrics, but I just wanted to get this on here. I'm going to leave this chart. We're on the same Bitcoin all-time history index here on this chart. I'm just going to look at it through a kind of different perspective, right? So if we notice here, the very first bear cycle that we had, and we're going to tie all this together at the end, right? We'll go through all of it. 93% from a high to a low. That was your drop. Next cycle was 86%, okay? The cycle after that was 84 and then 77. You can sense a trend. We're seeing smaller, diminishing bear cycles as time goes on, right? We're also doing the same thing with bull cycles, essentially. So when we have our next bear cycle, wherever we might top off at, we likely will see less than a 77% drop, 77.5% drop, okay? And this is important to understand. We're going to measure how large the bear market is, or what we could expect out of it, because I think this will help us understand too what we're dealing with whenever it comes to preserving our capital, preserving our wealth, what to expect, right? If the bear market is the enemy, we should understand how big our enemy is. I hope that makes sense. It's not our enemy. I think the bear market is more friendly than it is a bad thing. It just depends on your risk exposure and what you're expecting out of it, right? But I think bear markets are full of opportunities, right? They say that what is it? People get rich and people make money in bull markets, but they get rich in bear markets. Is that what it is? I think that's how the saying goes. Anyways, so something less than 77%. I don't know, right? 86%, 84%, 77%. Let's say it doesn't drop another 7% like it did this cycle. Let's say it only drops 2% from there. So 75%. Let's go for that, okay? I believe this cycle we're going to end at the 2272. I think we're going all the way up to the 2272, just above it. Why do I think that? Because if we go back to the very first bull cycle here, to the very first bottom of the bear cycle here, high to low, we tipped the next cycle high right above the 2272. You can see it. I'm not making this up. It literally went right above the 2272. We take that same kind of idea. We take it to this high. We take it to this low, the bear cycle low. And you guessed it again, that next cycle topped off right at the 2272. Okay, last cycle we topped off at the 1618. I'm not going to measure it because I already know that. But going off of the statistical probability, being that we probably have months, over half a year of a bull cycle left, I don't think we're going to stop here. I would think that the next likely zone would be up here. So something above that is what I'm thinking. Okay, just to quickly explain my kind of reasoning there. We're assuming that we're going to top off around 500K, if not higher, by the end of this bull cycle. Okay. I'm going to go for 500K. If it's higher, just understand that these bear market targets are only going to be higher, which makes this more pessimistic. If we don't top off at 500K, we top off at a lower price. These drops might be rather conservative, and maybe we have more to go. We don't know where the top is going to be, but this is the best that we can. And this is why, again, I think anybody that talks about bear market preparation, while there's nice philosophical values that you can add to any kind of preparation video, I don't think it's really worth talking about. You don't understand what kind of beast you're dealing with until you're at the top of that cliff, right? And we're not there yet. We're just guessing at this point, right? So, but nonetheless, 500K, let's just say that's where I think we're going to top off at. If we drop 75%, which is 2% less than the drop that we saw last cycle, that would technically imply then, and I very much would expect that we drop 75% or less. That would imply that our bear market low comes in at a higher price, a higher price than our current price is right now. So as far as risk management goes, I don't know, if I was looking at this and I was looking to invest in Bitcoin or probably Bitcoin, not every crypto, I would think it's still a fine kind of, even for a long-term kind of hold. And that's why I got distracted on this whole aspect here, was I was saying that it's generally not good for long-term holds after we get into this finale phase, which I think we're in right now. It's not good to stack on for long-term holds, but being that I think we're still below where the next bear market low is going to be, right? Like imagine 4 years from now, people are going to think you were a genius for buying the lows at 120K. We're at 98K now. So in that kind of aspect, I think even if we go lower, right? Even if we go lower than this, if we top up at 500K, well, then that would be an 80% drop. That would take us back to our current prices. I doubt we see that kind of drop here. If we only see a 75% drop, but we don't go to 500K, maybe we only go to 300K. Well, then, maybe we drop down to 79K. It's still, relative to that move, right, that could happen, this is still a good area to buy. It's like buying here at 23K instead of buying at 16K. You might not have felt so smart at the time, but as of now, people treat you the same, right? You're just as smart as the person. You're lucky if you bought at 16K. You're smart if you bought in this area overall, right? Anyways, I hope the idea is simple, right? Likely you're going to bottom in your next bear cycle at higher prices than we're at now. Okay. So now let's get to the kind of meat of this. Now that I feel like we've understood our bear cycles. We've done some decent analysis as far as the timing goes, as far as the percentage drops goes, and talking about the timing too. There's something that I guess I left off the table that I want to address now. I expect that our bull cycle will end for Bitcoin probably in October, right? That's what I'm thinking personally. So if we go for the last two cycles, it's been a 12-month bear cycle. 12 months would mean that we literally would bottom in October of 2026. Let's say it's not 12 months. Let's say it's 10 months. Let's say it's 14 months, 16 months, whatever. It's going to be sometime in the end of 2026 to the beginning of 2027. Likely the late parts of Q3 in 2026 to the whatever parts, the entirety of Q4 is when we will see this next bear market come to an end. 75% drop or less, and it'll take around a year, give or take 2 months. Maybe it'll take 10 months, maybe it'll take 14 months, but probably around a year is what the bear market will take. Now, now that we understand that, sorry guys, hold on. All right. Now that we understand that, let's try and map that out actually, right? Because we have that kind of game plan here, right? Let's see. Maybe I'll put a cross line right there. Let's see. It would be 2026, end of 2026, something like that, right? Let's just say December 2026, and you'll likely be, I say likely, we don't know, right? But I'm going to say around 125K, something like that, right? Somewhere in this kind of area. That's where our bear cycle low will be. Hold on. Okay, so we're going to move up in this time, move down in that time, be over there. Where was I going with this? What was I going to say? Okay, now we're talking about preserving. We're going to talk about preserving ourselves through the bear market. How do we do that, right? So a good kind of rule of thumb, of course, would be to take profits, sell all of your assets, or maybe not all of your assets at once, but just as you DCA into the markets. I remember what I was going to say now. I'm sorry, guys. Before we get into this part, I wanted to talk about that's where the low is. Sorry, that the crosshair threw me off. We're not going to talk about that. We're going to talk about how long from the bear market end do we have until we really start going again in the next bull market. How long do we have to accumulate, right? So if the end of this cycle is going to happen, I think for Bitcoin in October, right? Where based on this chart, we had a 34-month period before the end of the bull cycle finale, right? Where you had low risk times to invest in Bitcoin. You had a 42 period here. If we take that same kind of idea, 42 months would be about April of 2029. 34 months, let's put a vertical line there. 34 months, let's see, would be basically here. And you could go a little bit less than this. You could go a little bit more. I'm thinking you'll go somewhere in between here. But again, what I'm measuring here, and we don't know, it's totally speculative, but I'm assuming that the end of the cycle comes in October for Bitcoin. If it does, that means that we will likely find our bear cycle low sometime in late 2026 around this kind of time frame here. And then we will have all of this time from then on to accumulate before Bitcoin's in its next finale phase like it's in right now, right? So all I'm trying to say here is from this point to essentially this point, a little bit lower, from that point to that point, a little bit lower, so something like that is preservation mode. And then from this point to this point, this is preparation mode. Preservation, preparation. Does that make sense? I hope that makes sense. Okay, now that we've gotten that clear, let's talk about preservation. That molds together better than whatever I was trying to do a second ago. So when it comes to preservation, I think we can talk about this without the charts right now. A good method is to DCA out, right? You can DCA in, and that's always a good way to get prepared for the bull markets, but DCAing out is a good way too. There's a lot of people in crypto, especially Bitcoin maxis, who believe that you should always hold some Bitcoin. So when you DCA out of the markets, of course, take some cash, but there should also be some of that gets allocated to long-term Bitcoin storage. And now, is that the best thing for you to do as an investor, as a speculator, as a whatever? I don't know. That's not for me to say. I'm not your financial advisor. This isn't financial advice. But as time goes on, Bitcoin is one of the only things in life that's basically mathematically guaranteed to gain value versus the dollar, right? And some people might hear that and be like, you can't say it's guaranteed. No, literally it's math, right? It's math. If you have a very basic concept and understanding of what math, you don't even have to understand complicated math, just basic algebra, okay? And you understand the fundamental laws of economics, supply and demand, okay? It's impossible for Bitcoin to do anything versus the US dollar than gain value. It's literally impossible. Okay, unless Bitcoin crashes. But the only way to crash Bitcoin is to do a 51% attack. To do a 51% attack, you have to have hundreds of billions of dollars worth of computerized servers. And it's all theoretical that you'd even be able to do it anyways, but you'd have to have so much power, so much money specifically to manage Bitcoin, and then you would crash it, and now all that money that you put into those servers, it's worthless. It just goes, there's no, it wouldn't, first off, it's a very highly unlikely thing to happen, that Bitcoin will go to zero, or that it wouldn't gain value versus the dollar. It's just very high, it's not technically, theoretically impossible, right? But very highly unlikely. The dollar is more likely to crash than Bitcoin is to crash, if that makes any sense, right? The dollar's crashing every day its whole life. So Bitcoin is mathematically going to grow in value versus the dollar. And I'm getting hung up on this point because it is important to understand and remember and consider whenever you think if it's the right decision for you to hold crypto or Bitcoin long term in cold storage. And you should. If you have a long-term hold, it should be cold storage. Probably not with Ledger, probably not with any kind of device that has a backdoor code to it, right? Unless you want that for security purposes or secondary protocols, whatever. I think having cold storage that nobody else has access to but you is probably the best way to go if you're going to have long-term storage in Bitcoin. But there's also the option of not having long-term storage in Bitcoin and just having cash, right? And there's also an option of having other cryptos as well. Today, I made the discovery, and I'm sure other people have too, right? I'm not like crypto Jesus with this, right? I'm sure other people are aware of this as well. But Binance has actually outperformed Bitcoin the last 2 bear cycles in a row, and that is a huge deal. There's no crypto outperforms Bitcoin on the way down, but BNB did. BNB outperformed Bitcoin, and what's cool about BNB is you can stake it. You can long-term stake it. And I want everybody to understand what that means, okay? They might not say this, and maybe they do say this. I'm not 100% sure with what their policies say or don't say, Binance for BNB, but when you long-term stake, when you stake anything, I don't care what they say, it's self-custodialized, but you're staking. No, when you're staking, you are essentially lending your money to the network. That's what you're doing, right? Anytime you're staking, there might be ways where if you're staking it and it's locked up. Okay, there's ways where it's not being lent, but if it's staking, you in a certain sense don't have control of it anymore, right? So if that's a problem for you, staking might not be the way to go. But if you're okay with that idea, BNB, you can do these long-term staking setups where you get, I think it's like 20% APY. Okay, now think about what I'm saying here. I know that not everybody in crypto is going to make the kind of money that I'm talking about, but let's say you have $1 million by the end of the cycle. Let's say you only have $100,000 by the end of the cycle, or $10,000. Maybe something that's more relatable to the average person, or maybe the average person in crypto has more than that. I don't know, right? I don't know what everybody's situation is. Maybe it's less. Maybe it's only 1,000. But I think everybody could strive to at least have. If you don't have 5 figures, you could at least strive to have this. If you have more than 5 figures, then the numbers only go up, and you can just do the math, hopefully yourself, right? If you've got more than 5 figures, hopefully you're smart enough to be able to do the math that we're about to go over here. So if you had $10,000 by the end of the cycle and you put it into long-term lockup staking with BNB, 20% APY would then mean that you get $2,000 a year in the bear market, right? So and maybe not 2,000, right? Because if it's 10,000 BNB drops in that year of a bear market, okay, if it drops in that year, you're going to get 20% relative to BNB, not relative to the US dollar. So if it's worth 10,000 at the start, by the end of the year, it's only worth 5,000. You might, instead of $2,000, you might only get $1,000 at the end of the year. You'll get the same amount of BNB from when it's at the top. I hope that all makes sense. But then if you keep it in lockup, if you keep it in that kind of lockup phase and you're staking it for another 2 years or so, right? Because the end of the bear market would likely be in a year, but the kick-ass finale phase of the bull market, when the Bitcoin dominance drops, whenever Ethereum kicks off, whenever we do our finale phase in the bull market, that would likely be another 2 years later, right? Because again, remember, if we're looking at the charts here, right, it would likely be, assuming that the cycle ends in October and we do something that's in between 34 months and 42 months, likely it would be either sometime in early 2029 or late 2028 before the next Bitcoin bull cycle saw its finale phase. So you have all this time to not just accumulate and get yourself set up for the oncoming cycle, but you also have that time, if you'd like to keep your money staked in BNB. BNB will outperform Bitcoin in the bear market. It will likely outperform Bitcoin in the bull market. And a lot of people, or at least some people, have started to do this thing. Ben Cohen is pretty famous for doing this, right? He left all of his, I'm going to the Bitcoin dominance here. He left the majority of his investments, I think it was like over 90% or more of his investments in Bitcoin up until we got to this peak here, until we broke 60%, right? And the reason for that is Bitcoin outperformed the majority of altcoins. There's some altcoins, there's a handful of altcoins that outperform Bitcoin in this amount of time, but the majority of altcoins were underperforming Bitcoin. So the best thing to do, in other words, right, and this is why it might be a bit abstract, or it might feel like I'm going off point, but I promise you I'm about to bring it back, is that the whole point is that you don't just want to preserve your wealth through the bear market, but you want to prepare through that preparation phase in the bull market too, right? And some of that means that just because the bear market's over doesn't mean that you should reallocate into altcoins, right? And that's why I think that this metric is really good to look at, because if you follow this metric, I would assume this amount of time before things really kick off again, I would assume this has a pretty strong correlation to when the dominance drops off as well, right? Because the Bitcoin dominance dropping off is directly related to that finale phase in the cycle, right? That's when it is. So if the dots are connecting here, and you're holding a coin like BNB, which over time, we look at it here, over time is only growing versus Bitcoin. It's only growing versus Bitcoin, okay? And the time here that it lost value versus Bitcoin, it was November 2022 to December. I don't know. I guess it lost some value there, but that's because Bitcoin in at this time ended its bear cycle and it started moving up. That was because Bitcoin in this time, right, the dominance was starting to go up. That was through this time. So it lost some value versus Bitcoin in that period. But this was already at the end of the bear market. My point being though, that you could leave your money staked in a long-term contract with BNB, get 20% APY for a year, 2 years, 3 years, because some of these times it's 42 months or 34 months, right? That's 36 months is a 3-year period. 42 months is over a 3-year period. That's 20% each year. You could lock up your bull market earnings in BNB. BNB, by the way, again, it's done better than Bitcoin. BNB USD. It's done better than Bitcoin on the last 2 bear cycles, right? High here to low there. Last bear cycle, that was a 73% drop. Bitcoin technically dropped 74%. If we do BNB USD on crypto here, so we have more historical data, this bear cycle here from January 2018 to the low, it dropped 82%. Bitcoin dropped, sorry, I think it, 83%. Bitcoin, I think, dropped 87% or 80, what was it? What did Bitcoin drop in that one? Dropped 84%. 84%. This one only dropped 83 and a half. It's not necessarily that it's crushing it versus Bitcoin, right? It's not doing that phenomenally better than Bitcoin, but it technically is doing better than Bitcoin in the bear markets, and you get that 20% APY, and the bear market lasts for a whole year anyway. So all I'm trying to offer by this kind of perspective is if you're putting your money into Bitcoin for long-term storage, there's no harm, or you're putting it in cash, there's no harm in also putting it in BNB, I think, for long-term storage, because then you could get that 20% APY as well. If you put it in USDT or USDC or one of those kinds of coins, it's only like 4% or 8% APY, right? And that's great, but that's a lot lower than 20%. And then at that point, if you're in USDC or USDT, you're not invested in crypto. You're invested in stable coins, where if you're invested in Bitcoin, you at least have that exposure. If you're invested in BNB, you have that exposure. I don't know. This video, I feel like, went kind of off. It was more of like it was meant to be preparation for the bear market, and I feel like I've kept that kind of theme, but it really started to turn into kind of like a shill for BNB almost. I'm not a paid shill, okay? I don't actually own any BNB or anything like that, and I definitely am not getting paid in BNBs to talk about it right now, but I do think BNB would be a good kind of part of preservation whenever it comes to this bear cycle, because again, even though you might lose value, right? If you're doing the long-term holding, you're okay with it losing value as long as it's losing less value than the average altcoin. You're okay with that as long as it's losing less value than the average altcoin, it's losing less value than Bitcoin, and you're getting a 20% APY in your staked BNB coins, which you wouldn't get with Bitcoin. So, and then when you stake BNB too, you're staking it with Binance. You're not staking it with like Blockfolio or BlockFi or whatever these third party, and Binance would it be third party? I guess it wouldn't be. It'd just be between you and Binance. It's not a third party thing, right? That's the whole thing. Binance BNB, because it's centralized, I think is actually more secure to stake than some kind of third party off account crypto Bitcoin staking pool. Whatever kinds of things go wrong with that kind of stuff. I know. Don't drink from plastic. I know. I can hear all of you saying that. I think I've said enough. I want to try and wrap this video up, okay? But essentially, my plan, if I could surmise it all, would be that I'm going to probably do it this way, okay? This is exactly how I'm going to do it, really. I'm going to phase out. Just like I phased into the cycle, I'm going to phase out. I will DCA out day after day, week after week, whenever it feels right. I will not just DCA out from a time perspective, but I'll DCA out from a price perspective. I will layer orders preemptively ahead of time that will just strike and hit at whatever I designate as an appropriate selling price, right? As I'm selling, as I'm taking profits, 30% of it, 33%, a third, will go into long-term storage for Bitcoin. A third will go into long-term storage for BNB, of which I will stake. And then another third will go into just cash, at which case I will start to reallocate after a year. Okay, so with the benefits of all three of these, right? Bitcoin, long-term storage of Bitcoin, a third of that. Well, you're preserving your wealth in one of the most secure long-term store value assets that exists on the planet. Can't go wrong there. That's not a bad idea at all, taking a third of your wealth and doing that, or at least a third of your earnings and doing that. And I say a third, I'm probably going to be very stingy, so I probably will keep a lot of it in long term, but there's going to be some that I use for my life as well. So I say 30%, 30%. I should say this will be a third of what I have left after I use my earnings to enhance my life, right? I'm going to, there's a bunch of things that I'm sure all of us plan to do with our bull market earnings, but some of that should be to save. Okay, and with the savings, after you enhance your life, after you do whatever, you buy your house, you buy your new car, you go on vacation, you buy the wedding ring, you buy the wedding, the whatever it is that you're doing that's important in your life, you start a business. After that, the money that you have left to save, the money that I would have left to save, this is how I would do it, because I'm not a financial advisor, this isn't financial advice, it's just my opinion, is 33% of it would go into long-term Bitcoin storage, because again, secure asset, guaranteed to go up against the dollar. It's basically infallible versus the dollar or any fiat currency. So that's good for 33% locking up in there. 33% in Binance for long-term staking, 20% APY storage that I will use. So Binance will preserve itself through the bear market. My wealth will be preserved. And then whenever it comes time for the bull market, it will also preserve itself pretty well against the average altcoin as well. Meanwhile, while we get to that last phase of the bull market, I'll have that staked the whole time, using that APY monthly, yearly to reallocate into the markets, into other altcoins while we have that long preparation phase after the bear market, right? And then once we're at that final liftoff phase, and then I haven't even gotten to the dollar stuff, right? After the bear market, ideally with the dollars, with the 33% of the US dollars that I would have saved up to allocate back into the bear market, we would wait about 12 months. I think waiting about 12 months. I'm not going to wait 10 months. I think I'm going to wait 12 months or more. It's not going to be a price thing. It's going to be a time perspective. And maybe we can look at the price too, but I really think a time perspective, a kind of seasonality, cyclicality perspective is good here for the dollars, right? The amount of US dollars that I will have saved up, sitting on the side, ready to allocate back into the markets, they're going to sit there. Might as well go under my mattress, be buried in the backyard, be in a lockbox in a bank account for a year. Not going to touch it. Maybe put it into USDT or USDC, because that's as good as putting it in dollars, and then you can get that 4% APY as well, right? There are USD stablecoin cryptos that you can get some APY as well. Or you can just put it in Robinhood, or there's exchanges that take your regular USD. There's all kinds of ways to get some APY back with your USD, even outside of crypto. So you're doing that, then you allocate that not at a specific price, but a specific time, a year, 12 months after the bull market. That's when, with that 33% of your US dollars, you start to phase. You don't dump it all in at once, but you phase back into the markets. You choose over months, over weeks, over maybe even year. I say year, literally year, a year, or maybe a little bit over that time. You take some time to allocate into the right projects over that amount of time, right? And start to phase in, because again, in that time, if you wait 12 months, sure, we'll be at the end of the bear market, but even after that, Bitcoin's still going to outperform most coins, right? So, and there are some coins that even after Bitcoin's done with its bear market, they continue their bear market. So it's going to be worth not just deploying all that money, but starting to phase in. I hope that all makes sense. Okay. And then going back to BNB, after you're phasing in with your USD, you'll also be able to start phasing in with your APY staked rewards that come to you monthly from BNB. And then that's at the end of the bear market, you should have 20% of what you staked, which by that time you might have 50% US value. So it's really 10% of what you had at the height of the bull market, right? Something like that. But you're still monthly getting that APY coming in, able to invest that. And at the end of the bear market, it might be an ideal time to invest in various altcoins, Bitcoin, whatever. But then as the market continues to go on, as Bitcoin progresses through its bull market, it's outperforming altcoins. Some altcoins are still losing value versus the dollar, let alone losing value versus Bitcoin. You can use your APY from BNB as long as it's still staked throughout this time, where even though the bear market's over, but the bull market's begun for Bitcoin, other cryptos haven't begun their bull market. You can use that APY that's staked in a solid coin like BNB that hasn't lost any value versus Bitcoin, right? It's just staying basically stagnant right there. While you're getting that APY, you can allocate into other things that are losing value. And then when it comes to that final finale phase of the bull market, I think it would be a good time to dump or deallocate from your Bitcoin and from your BNB, and then put it back into the markets and let the whole thing ride. I don't know how much sense that makes. It's a plan right now. It's just some thoughts that I've had as far as what I want to do, right? Segment it into 3 different things. I think it sounds solid, right? And of course, it sounds solid. It sounds like a nice plan, but you never know, right? You never know what the future is going to hold for you. You never know how it's going to look. And at the end of the day, the amount of money that you have to reinvest, it might be greatly diminished than what the amount that you took profits are, because you might spend that money on things in your real world too, right? If you cash out at the top of the bull market with 100K, by the time you reinvest, you might only have 20K or 50K or less than that, right? Or maybe more than that if you spend it wisely or invest it wisely, but you're not going to have the same. It's important to prepare for the bear markets. I did my best, man. I don't know what else to say in this video, so I'm going to end it there, I guess. Hit the like button, subscribe if you want to see more content like this. When preparing for the bear market, it's very important to consider it from a time perspective, not just from a price perspective, okay? When preparing for the bear market, I think that literally walking away for about a year will be the most ideal thing for you to do. And then once you come back, do not dive full head first. Don't dive full head first back into the markets. Take nibbles here and there, month after month, week after week, but not all in at once, right? It's the same thing on the way in as it is on the way out. I hope this all makes sense. I hope you guys liked the video. If you did, hit the like button, subscribe. I'll see you on the next one. Take it easy. Bye-bye.